Welcome back. You're still with us on Startup Street. Now, the funding winter that has startups shivering is getting bleaker and could last a lot longer than earlier estimated. CNBC-TV18's Hormad Fatakia reports that with the chill settling in, India has not had a single new unicorn join the club in the last 6 months. Take a look.
Byju's, Simple, Zomato, Unacademy. These are just 4 of dozens of Indian startups that have had to go in for large-scale layoffs to keep their lights burning. Access to easy money has dried up, and investors are pushing companies to put profitability over growth. A few companies have even had to shut down non-core verticals to cut costs, like Swiggy shutting down Super Daily in 5 cities, or Ola shutting down Ola Play, Ola Dash, and Ola Foods. The funding winter is not showing signs of easing up either. In the first quarter of 2023, investments into Indian startups is down 75% from a year ago. The freeze is visible across the board, from early stage funding to late stage funding, and even the funding rounds have shrunk in number. This has meant that India, which saw over 20 unicorns being created in the first 9 months of 2022, has not had a single unicorn join the ranks in the last 6 months. The turmoil in the startup ecosystem has also meant that many have had to put their grand plans for an IPO in cold storage. The list includes some marquee names like Boat, Go First, MobiKwik, VLCC, Oyo, and Mamaearth. Some have also had to resort to accepting lower or stagnant valuations in subsequent fundraising rounds. Even the startups that did manage a listing, often at eye-watering valuations, have been struggling, and as have many of their shareholders. Zomato, for instance, which kicked off the trend of new age IPOs in July 2021, has lost 50,000 crore rupees in market capitalization from the high it hit on listing day. Shares of other new age listings like Paytm, PB Fintech, Nykaa, and Delivery have also taken a beating on the bourses, a few correcting up to 60% from their IPO price. While some counters have recovered substantially from their all-time lows, they are still a long way away from their IPO price. But experts say that this kind of pain will not last forever.
I think you're going to see some down rounds. That's natural, and I think it's perfectly fine for companies to take their medicine and keep moving forward. So I'm optimistic that on the other side of this, sort of, whether it's 9 to 12 months is probably my personal guess. I think on the other side of this, you'll start seeing valuations become more normalized, and you'll also see the IPO market open when we have more stability around the interest rates as well.
They add that the funding freeze will also thaw, though there is doubt whether that earlier exuberance and the propensity to put profitability second to growth will return to what it used to be. So investors may have to wait a while for the next new age IPO that commands a staggering valuation. In Mumbai, Hormaz Fatakia.